Whether you have a private company or a public, small or a big one, non-for-profit or a business, everything has a tangible value. For listed companies, we call that market capitalization. For private companies, we may call it valuation. There's various terms, but ultimately what both these terms, valuation and market capitalization or market cap, mean is the total value of any company. So if the market cap of Apple, let's say, is $2 trillion recently, which it just crossed, that means that the total shares in Apple, everyone who has any stake in Apple whatsoever, if you join all that together, you get a value of $2 million. Now, there's two other variables which play a role into how this market cap really works out. One is number of shares, and the second is the share price. So any company that's got into a certain size, and especially if it's a public company, it's probably got hundreds of thousands or millions of shareholders in the case of a company like Apple, right? And they all have funded the company at some stage. They've infused money by either buying shares or participating in a preferential issue. So once these investors essentially get a share, which is a unit of ownership in that company, it is assigned a certain value based on how many shares are there in the total company. So let's say some companies can have 100 shares of 1 rupee, and that takes it to 100 rupee market cap. Some companies can have 10 shares of 10 rupees, that takes it to 100 rupee market cap. Some companies can have 5 shares of 20 rupees, that takes it to 100 rupee market cap. So there's all kinds of permutations and combinations possible, which is why share prices on the exchange are all different. And that's also why sometimes a share price of 2000 rupees can be for a smaller company than which has a share price of, let's say, 500 rupees. So the share price is much higher, but the market cap is less, because it is share price multiplied by the number of shares totally which are there in the pie, which gives you the market cap. So that's how you calculate it, and it is the total value. So it changes on each company because each company has its own level of equity. So every company has a different number of shares. Typically, the best companies have the fewest shares outstanding, and that's why they have the highest share prices on absolute terms. So if you look at companies like MRF, which has seen share price go up to 50,000 rupees, or Aisha, which is still at 20,000 rupees, these are all companies which have very low share capital but a very high market cap, and that's why their share prices are so high. So on the converse side of things, you can have companies which are very large but have diluted a lot of equity or have raised a lot of equity, and as a result of that, each individual unit or share is much smaller in value. So it can be a 40 rupee share, or for example, let's say Reliance share today at 2000 rupees is a 10 lakh crore company. But Aisha share price at 20,000 rupees is a much smaller company, although it seems that it's got a larger share price. So that's the point I'm trying to make. But to simplify it for you today, market capitalization is the total number of shares in any company multiplied by the share price, which will give you the market cap. If you want to work it backwards, the market cap divided by the number of shares will give you the share price. So that's a little summary on what market capitalization really is and how it's calculated.